360. I'm Diane King Hall. Time now for the big three. Three stocks, three charts, and three trades. Rick Ducat will take us through the charts. And here to take us through the trades is Jessica Inskip, Director of Investor Research, stockbrokers.com. It is great to be with both of you. Jessica, before we dive into the tickers on your list today, I want to get your big picture take on the market, especially this week. I wonder if you anticipate being range bound really to the end of the week until Jackson Hole.
Exactly, Diane. I think it all points to Jackson Hole. Jackson Hole has been such a pivotal moment normally within Powell's speeches. I listen to Powell's speeches so heavily because it gives us context and indication of how he's thinking about the consumer data and where he's thinking about the rate environment. And anytime that he's pivoted extremely hawkish or extremely dovish has generally been around Jackson Hole. So there's a lot of eyes on it just from a market analysis perspective of really that's his view on the economy. And so I want to see how that translates and how market participants really react to that. But all in all, earnings coming out, it's still showing that resilient consumer. I think it's pockets of the consumer. I like Yardini's thesis of it's this older nest egg that's really going through the data where this older generation wants to spend all of their money, thus creating this propped up consumer, which isn't necessarily representing the broad-based consumer. So I think there's cracks. I want to see how Powell interprets that. I'm not buying this notion of, oh, let's lower interest rates that will automatically lower home sales, but then that translates over into a lot of my picks today that we can certainly discuss. But I think it all points to Jackson Hole, to your point. How does Powell feel about the data? And that will translate into, of course, market participants.
Jessica, I was literally thinking that's a nice tee up for a couple of the names on your list. Let's start out with Builders FirstSource. I know that's on your list. Obviously, they would be impacted by the plan from here for rates and whatever happens in September and beyond. It's been an underperformer year to date, which does make sense in the context of today's climate. But how do you see this one?
So all of my picks today came up on my weekly scan where I'm looking for a crossover of the 13-week moving average over the 26 weekly moving average. And for those who don't follow me, that just represents 1 quarter and 2 quarters worth of prices. I layer on the 40, which is 3 quarters. So that tells me it's a bottoming, and I'm looking for quarter over quarter price follow through. This showed up on that list, as did everything here. And I think it's interesting that it's this housing theme because there was a big headline this weekend where Warren Buffett had big positioning in a lot of home builders. And again, that's this notion where we take this playbook where the Fed lowers interest rates, all of a sudden that's going to lower the cost of housing. And that's not necessarily true. We saw that when he lowered in September. And also normally when we're lowering interest rates, we go all the way back in time. It's because we need to stimulate the economy. And of course, the back end of the curve could go up based on inflation projections or growth projections like we saw it in September. So I do wanted to preface with that because the home environment, there is some data showing that there is growth there from a longer term view from Fannie Mae, but there's also data showing that there is a bit of a contraction from some of the data that we saw today. However, repair and remodel spending is expected to remain a bright spot. So that's where Builders FirstSource really came in. So their Q2 sales, they did fall by 5% year over year. A lot of it was weaker multifamily, which is interesting. Single family was down 9%, multifamily 23%, but it was offset by repair and remodel and acquisitions. So mortgage rates are going to be pressure there if there is any fiscal policy that has follow through, which there is some implications within the BBB bill that could certainly help. So that could help this. And also the technical setup is something I really like. Take that into consideration of this pulling forward of what we expect to happen within the housing market and my trepidations with that. If to play this, I would do a cash secured put, which is a neutral play since it's showing support and it did that crossover. So meaning sell and at the money about 45 days out, cash secured put. That's neutral in the short term. If it moves against you, you're required to own the stock, which is really your risk perspective. But if it does move slightly upwards within the 45-day period or stay exactly where it is, you realize your maximum profit potential, which is just holding on to that premium, which could act as a discount if it moves adversely. So something that I'll take a neutral play on the short term, longer term bullish on the long term.
Okay, Rick, I'm interested to know what you notice about this chart, especially given that Jessica's look across this was a technical scan.
Right. So 135 was the area that I believe Jessica was saying could signify trend reversal here if we close above that for the week. So right about there or so. That's about where price has gotten stuck a few times in this range-bound sideways activity during recent weeks here. For now, though, price, we did get that breakout as well, but things faded a little bit here. So now price is pushing above our purple 252-day exponential moving average to start the week, a longer-term moving average here. So we can see it's also starting to gradually flatten out, and what the bulls would hope would be the slope of that line would start to reverse course and start to trend upward here. We can already see our shorter moving averages starting to do that, our faster 21-day in yellow, crossing above our slower 63-day in orange. Remember, these are lagging indicators, though. The crossover itself is typically not regarded as an especially good trading signal, but an easy visual cue that the trend is improving here. So a couple other levels caught my eye. 145, this red line here, that was about where price had a bottom. Then after a bit of a slip below that level, that's where we found more resistance here. That's about where we topped out again recently. So a push above 145 would also kind of line up with the boundaries of this rising wedge type shape as well. An upward sloping trend line joined by another more gradually sloping upward trend line going across those highs. So if we were to assess some of our other studies, volume profile, standard deviation channels, well, the point of control on our yearly volume profile, 127.50 or so. That means that's a key trading area, an important point to watch. Volume starts to get heavy once again up here near 170, so that would be one area to consider in the longer term. A quick glance, too, at our 5-year chart to illustrate what Jessica was discussing here, our kind of quarterly moving averages crossing over each other as well. So those are kind of coming together all around 125 or so right now to the downside for support.
Okay, all right, Jessica, let's talk about the next one on your list. Iqvia is on your list. A little bit higher today. It's been an underperformer year to date. What's your thesis on this one?
So this was interesting. So again, same technical scale, but there was a short squeeze that happened with the security very briefly. It surged 18% on earnings, which was fueled by a short squeeze, but it's backed by fundamentals. So if we think about the meme stock and retail trading frenzy, when we have a short squeeze or we have this blow up in a security, we're looking for earnings follow through. This had earnings follow through. QT revenue grew 5% with a strong backlog in bookings. It eased fears for any type of CRO slowdown. There is AI-driven margin expansion ahead of their shares, and there's still 30% of it is undervalued versus fair valued. So I really think this is more of a cyclical recovery play. And it's very interesting that there's earnings strength that's here. So they did beat their earnings. Their revenue grew by 5% year over year. Their growth was broad-based, but also there is a collaboration with Nvidia, and that's going to expand their AI capabilities, which is estimated from analysts to only drive margin expansion. So I love seeing the growth. I like to see the good backlog, but furthermore, there is strategic positioning that would lead to further margin expansion.
Okay. All right. Rick, take us through the trends that you notice in this chart.
Yeah, so this is an interesting one as well. It was a setup that I think many traders are on the lookout for pretty much constantly here, which is that we had a big push upward on earnings here. So what this signifies, to kind of break it down, is we had a strong fundamental change. We had a strong catalyst in this earnings event here and the subsequent short squeeze as well. So what this tells us is that something major has changed for the stock going forward here. We can see then that after that surge to the upside, we topped out right around 205 or so. If you were to backtrack a little bit here, you can see this was a frequent boundary for price here. Not super exact, maybe 205 to 210 might be a slightly better range here. The point is we stopped at a resistance area. We had a bit of a pullback, a retracement, if you will. We found some support near our yellow 21-day exponential moving average. Now price is starting to push back to the upside again. So this kind of consolidated phase after a major sea change for the stock would be the result in the longer term hope that the price would eventually push above that resistance level and continue continue the trend. I'm not saying that's going to happen. I'm just saying that's kind of the thinking behind why this type of setup is so intriguing here. But we can see as well a confluence point right here for support near about 184, 185. Our moving averages, 21-day, 252-day exponential moving averages, lining up with this shorter term trend line to give us that boundary to watch to the downside here. You can see as well, if we were to add our volume profile study, heavy volume was down here near the supportive area, right around 150, 155 or so. Then you can see our point of control is just up ahead. So around 198 or so, and then up to about 205. That's going to be a really key area for price to clear if we want to, if the bulls rather would want to keep pushing upward. The next little volume node is up here, this kind of speed bump once again, so to speak, near about 220, just below that area. 5-year glance here just to illustrate that moving average crossover that Jessica was discussing, taking place right here. But, you know, a bit more of a more sideways longer term view than some of our other names here. Long term volume, heavy area near 215.
Okay, all right, Jessica, let's talk about the final trade on your list. You've got Lowe's on your list today. It's catching a bit of a bid today, similar, moving in sympathy to Home Depot off the back of its quarterly report card. It's been an underperformer year to date, though. So what's your thesis on this now?
Yeah, absolutely. It's this broader market consensus of a reacceleration within the home market that they believe they'll see. So pointing to Home Depot's earnings, even though they missed, there was commentary around broad demand, and it was broad as in location, but also within age and income cohort, which speaks to breadth if we're thinking about how we analyze the market. Nonetheless, that's of course catching sympathy from Lowe's, but Lowe's primarily, even though there's DIY spending is sluggish, they're leaning more into growth. So they had this recent acquisition with ADG, which pushes Lowe's more into this new home construction for the first time, but that's going to create synergies really across adjacent categories that they have, which are those appliances and other things that we need when we have new homes. We need to fill it up with things that Lowe's offer. So near term, the headwinds absolutely remain that I've called out within the overall housing market, but long term, they're more of this organic growth total home strategy that's expanding its reach and market share. So I think we'll see some operational improvements that will continue to offset weaker demand. But while this sector overall it faces short-term headwinds, I think it's positioned for this structural growth opportunity. And Home Depot and their reiteration of comps really strengthens that structural growth opportunity. So I'm definitely watching as Lowe's is reporting very, very soon. But we do need to pay attention to the housing market overall, and because of Lowe's overall positioning, I think it puts them in a good place perhaps to buy at this time.
Okay, so Rick, then what do you notice about this chart for Lowe's?
Right. So I've been to Lowe's and Home Depot about 1 million times each. I'm a homeowner with little kids. A lot of stuff in my house gets broken. From a consumer shopping experience, really quite similar. But Lowe's is definitely the smaller of the two here in terms of market cap here. They are very closely related, though. So look out for any kind of sympathy moves or similar headwinds for this industry as a whole here for maybe directional clues. But 259 here, we can see this was a low point several more times, and then it was another of these sticky price points that price kept kind of finding support and then resistance subsequently at there. That's about where we topped out a couple more times here. So 259, 260, that's the very short-term area to be on the lookout for. If we were to push above that area once again, 270, our pink line here, low points and then high point there. We have not quite made our way back up to that region yet, but that would be where the bulls likely would have their sights set on the road to perhaps making some new highs beyond that level here. 250, our green line here, we can see that was a high point here. Excuse me, my cursor there, but that was where we topped out a few more times here during this decline. That was another high point down the road. That's also where we tested support. So these these things can be a little bit messy here. You kind of have to look for the bigger picture, these general areas where price seems to keep bumping into itself here. So we can also see this triangular shape. Declining volatility led to an increase in volatility when the breakout happened, but for now, a bit of a pause as we head into earnings. Actually, momentum in the overbought area as well here. So typically momentum slows down a bit into earnings, but we're seeing a bit of strength here. So an interesting further signal as well to digest. If we were to think about our volume areas here, heavy volume here around 245 to 250 or so doesn't really line up too terribly well with anything near 245, but 250 is that area that we mentioned once again near our green line here. So that would be the supportive area. To the upside, 259, 260, that's where the volume starts to pick up again. That's where that +2 standard deviation channel comes in as well. So that could be a hurdle to clear. Our 5-year chart as well, just to illustrate our point here, we can see that longer term moving average crossover starting to take hold. And when I said the moving average crossovers were, typically maybe not the greatest trading signals, I was referring to the short term exponential moving averages, not these longer terms.
All right. Thank you, Rick. That's Rick Ducat, our lead market technician, and Jessica Inskip of stockbrokers.com. Thank you both. Appreciate it.